Hi, my name is Dan Elitzer, and I co-lead the blockchain and distributed web portfolio for IDEO CoLab. I'm here today to talk to you about a concept called stablecoins. You've probably heard about Bitcoin or Ethereum or other digital currencies, and they tend to fluctuate a lot in value. So the idea of a stablecoin is to have a digital currency that doesn't fluctuate in value. It has a stable US dollar or euro or other value associated with it. So there's a few ways that we can get there. One is that Bitcoin or Ethereum grows to the size and matures to the size with derivatives and other instruments that eventually it maintains a more stable price and people can use it. Think about using it as a unit of account, of pricing things in it, and of using it to kind of exchange value long term. I think we're a long ways off from there, but maybe eventually one of these currencies or multiple of these cryptocurrencies will eventually get to that point. Another way to get there is one where some small companies have said, okay, we're going to actually put US dollars in a bank account and issue a digital asset on one of these public blockchains as a way of having a US dollar backed store of value. That hasn't really worked out so well in the past when other companies have tried it. It's just very likely these companies will have their banking relationship shut off, or there could be something shady going on. So while there are a few that have tried it, I don't view it as one of the more promising solutions long term. Slightly more promising would be to have a large bank, a Citibank, a Barclays, an HSBC, be themselves custodying dollars or euros and then issuing these tokens publicly. They're going to be subject to a lot of regulation around that, and I think most banks don't really want to take on the risks associated with it. So that leads us to another solution. Maybe a government could directly issue this form of digital cash. The US government issuing a digital US dollar and making it available for anybody to use. I've heard of a lot of central banks actually thinking about doing something like this, but they're not viewing it as true digital cash. They're seeing it as akin to a more directly user-controlled ACH or kind of wire payment system. The problem is those aren't real bearer assets. If I give you a $20 bill, you don't have to worry about where that's been in the past, and there's nobody intervening and kind of monitoring all those transactions. If we want real digital cash, it needs to be a bearer asset. I think eventually we will see a smaller country, maybe Singapore or an Estonia or someone like that, say, hey, we can really raise the global profile of our currency by making a true digital cash version of our currency, and we'll still manage it and kind of maintain a stable purchasing power for that currency. I don't think we're close to that, but we may see it eventually. The final way is to do it through essentially creating a series of smart contracts, a way of using market forces to expand or contract the monetary supply of a cryptocurrency such that it maintains a peg to a dollar or a euro or anything else. There are some groups like Basecoin that are working on protocols for doing this. I think it's going to be really hard to get right. There's a lot of reasons why it probably won't work, but I'm excited to see some very smart people working on this, and it may be a way that we can get there in a way that truly is decentralized and can't be kind of censored or shut down. So that's the quick intro on stablecoins, and hope you enjoyed it.